better than him, who's actually with us in Mumbai, here in the studios with us. Arvind, great to have you in. So let me ask you that question. I think that everyone's wondering. It's not like the market didn't know this, but Mr. Powell has only reiterated and confirmed what everyone's been talking about. The rates being higher for longer, sort of a theme. But you tell us, does it mean equities need to reprice down further, or is this going to become a bargain hunter's market at some point?
Well, so let's separate India from the global markets, right, and the US. And let's just talk about from a US context, and then let's come to India because, you know, we need to contextualize it. I think the hope that was growing in the US till about a month ago was Goldilocks, soft landing, there would be no recession. And I have been consistently skeptical of that view. In your last, I think a couple of weeks ago when I was there, I talked we might get to 6%. That seemed far-fetched even 2 weeks ago. Yeah. And after yesterday's testimony, now people are talking about 5.75, 6 is around the corner. So I think that the reality is that the inflation is proving, and this has been my consistent theme through the last 6 months, that inflation is going to prove to be more persistent. The easy goods inflation came off, but the other elements of inflation are more sticky, the services, the labor, whatever. So therefore, Fed is going to have to hit the brakes harder. And I think somehow the hope has been that, you know, that we can escape without pain. There is no way, in my opinion, that the market in the US, and this may apply a little bit to global markets, can bottom before a US recession has even begun.
Oh, okay.
That has never happened before, so you have to be very careful about saying this time is different.
Yeah, but the market was always, you know, till now, having the view, as you said, the Goldilocks, oh, it'll be a mild recession. It won't exactly, you know, derail everything, and equities were trying to chug along. Does that change?
Absolutely. Well, you know, mild recession was still not the central case. The central case was no recession. And that rolling recession, we had some 1 or 2 quarters of negative GDP growth, but earnings will stay high. S&P earnings will be fine. So I think that all of that has now changed. And so I think the challenge for emerging markets, so India's had 3 headwinds. Now let's talk about India. India's had 3 headwinds, the global Fed tightening. You've had the China repricing up, which has caused flows to, you know, get reoriented, and you had the Adani meltdown. Now, of the 3, the Adani worst is behind us, and I think in the long term, I will make a controversial comment, that I think what has happened with Adani will be long-term beneficial for India, including India infrastructure. You do not want a private monopoly controlling significant chunks of the infrastructure, and I think there are signs that this will be healthier for long-term India growth. So I'm actually more bullish on India now that we've had whatever needed to happen in terms of, you know, repricing that situation. So then we come back to the other. So the U.S. Fed story is still a negative. The China story is looking like China is continuing to disappoint even in its reopening. The reopening has happened, but from the statements from the NPC over the weekend, it's clear that they're taking a much more measured, slower opening approach. So that puts the risk of capital rushing into China from India, which had happened for 3 or 4 months, that is behind us. Okay. So then the third thing is, I think, the India growth story, and I think the India growth story is not dependent on US Fed rates.
So, you know, by the way, it's great to have you here in our studio. And what brings you to India?
Oh, just coming and visiting companies I hadn't been in a while, so it was overdue.
And have you had those visits already? Any key takeaways from the ones that you've met?
Not yet, because just Monday was my first day of meetings, and then, you know, I'm doing more in the next 3 days. But the impression I have from the people that I've talked to in the last few days is that, you know, look, the fourth quarter GDP, the fiscal third quarter GDP was disappointing. There's no way to put our, put a soft point on that one. But I think if we look at where we are in terms of the growth story, the legs are there. Whether it is the, China +1 outsourcing or other elements of business confidence in the U.S. I mean, in India returning. Yes, maybe the IT companies always have to worry about a U.S. recession more, but there's enough domestic facing. And there's been a lot of innovation in India that we don't appreciate in terms of the payment system and other things that give, friction the main problem in India has been friction of cost of doing business, right? Whatever we call ease of doing business, a lot of it is friction. And if this government continues to do the right things, and I'm hoping that some of the things that were rolled back, that if in addition to the PLI scheme, further moves on labor, farm, all of these, I know they're controversial before the 24 election, but I think over time, I'm hopeful that we'll continue.
But if you're so bullish on the India growth story, do you reckon that even if there is a not just a mild recession, but even if there's a full-blown recession in the US, India could still sort of manage to emerge unscathed?
I don't think India emerges unscathed. So I talked about 3 headwinds, right? So the China headwind is gone, but the US Fed recession risk headwind, India is not completely divorced from global growth. So in that sense, that headwind will remain. So looking at more domestic-facing companies, in our opinion, is a better way to play the India story than the global story.
All right. Hi, Arvind. Good to have you in the studio. Arvind, how are you handling the heat? Isn't it quite hot out here?
No, I actually moved to Miami a year ago, so it's quite comfortably similar.
I ask you that because I recall the last time you joined us, when you were talking about the terminal rate at around 6%, you also highlighted that the power sector in India could do pretty well.
Yes.
And that's played out actually quite well in the last, I think 20, 30 days or so. We are seeing a lot of buying on power names. Do you think that's a good theme for India? It fits in with the scorching summer that we're bracing for. It also fits in with the domestic theme. And Fed tightens or not, that sector could be in focus.
Power.
Yeah, absolutely, absolutely. We think that that it's a real challenge, and it's kind of a common. We launched a fund in the U.S. which we call Sensible Energy Transition Fund, and I think part of what happened is that the whole world, and India was no exception, has jumped too quickly on the renewables bandwagon, forgetting that the sun doesn't shine at night and the wind doesn't blow when expected. And so I think what you're seeing is that the challenges of power, especially if you see the peak pricing of power in the power trading markets in the morning before the sun comes out, and in the evening when the sun goes down, there's ridiculously high prices. And I think that's speaking to the reality that India is going to have to reinvest in thermal power generation. I realize we have all these zero carbon goals and all this carbon reduction, but the reality is that you cannot have an economy prosper without energy, and you cannot make the sun shine on demand at night. So therefore, there is no choice, because the cost of battery storage is not economic versus India's needs.
So underinvestment in the thermal power plant space that could still present a big opportunity for some of these parts.
Absolutely, absolutely.
Okay, that kind of brings me to the next question on my mind, Arvind, and that is government capex versus the private sector. So we've been having this elusive conversation about when the private sector is going to move and capacity utilization levels at 80%. And we're still waiting for that. What has, of course, kept the market in high spirits is government capex. And we've seen that play out not just in some of these power companies, but in stocks like ABB, Siemens, railway stocks, defense. Do you see that needle shifting towards private capex? If yes, how should portfolios gear up for it? First of all, do you think it's needed at this point at all, or should you just stick to some of these government capital expenditure themes?
I think for the long-term efficiency of the economy, let's be honest, there is no way that government capex is as capital efficient as private sector capex. So from an economic growth long-term, let's forget for a moment the short-term, you need more private sector capex. That's what is done efficiently. I do believe, whether it's cement or it's steel or it's other sectors, the capex needs are there. Even in power, it's not all going to be NTPC only, right? There's going to be required to be some private sector investment. So I would think that in terms of the long-term, even medium-term, I would make a bet that private sector capex is coming. It won't come all at one shot. But
just on power, since you're positive on the sector, how do you deal with the fact that your returns are regulated? It is a regulated sector. So how do you navigate that? Do you play something else in the chain, or is there simply no way out?
Yeah, I mean, it is always challenging in India. We have made a lot of money in investing in coal companies around the world. We own Coal India, but Coal India is not able to benefit from, they're selling coal at less than $20 a ton, and you can find companies globally selling at $200, $300 a ton. So, you have those challenges in India, but, whether it's an NTPC or an NHPC or others, there are opportunities in the power sector, but we are looking at private sector companies. There are a few, and seeing which of them, whether it's in the power trading business or it's in the private sector, JSW Energies and others. There are opportunities in the private sector power, but a lot of companies have gone bankrupt over the years, so you have to be careful where you put your money.
Okay. Arvind Sanger, always great speaking to you, whether it is in our studio or remotely. Thanks a lot for joining in. Hope we have more in-studio meetings from you, and thanks for your thoughts as well. Have a great India trip.
Thank you. Appreciate it.
All right, well, that's the market, but let's talk about the big deals that have happened in the banking space. Axis Bank last week sealed the deal to acquire Citi's consumer business in India for 11,600 crores. This move brings 3 million Citi customers into the Axis fold. To discuss in detail on this deal and their business outlook, we have Amitabh Chaudhary, the MD and CEO of Axis Bank, joining us now. And we have Lata in the studio as well to take us through the discussion. Mr. Chaudhary, before I hand it over to